Five, four, three, two, one. Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax referral options. Not having a clear plan is the enemy, and using a proven tax referral strategy such as the Deferred Sales Trust or other ways to defer millions of dollars in capital gains tax is a great way for you to create and preserve more wealth, or have your clients, friends, and family do the same. For those who don't know me, hello, my name is Brett Swarts. I'm the founder of Capital Gains Tax Solutions. I'm also a multifamily broker. In each episode, we're bringing on some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and secrets, so we can all create and preserve more wealth and really learn from some of the best in the business. I'm excited about our next guest. He's out of the great state of Michigan. He hosts a syndicated radio show with over 70,000 listeners. He was the head or headed up a broker dealer with a financial advising industry. He has a new amazing book that we're going to be talking about here as well, coming out. Please welcome to the show with me, Dennis Tubbergen. Dennis, how you doing, sir?
Hey, Brett, I'm doing well. Thanks for having me, and it's a pleasure to chat with you.
Absolutely. And for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, I came up as a traditional financial advisor, if you will. I won't tell you the year because that'll give away my age. However, as that evolved, I was a founding member of a broker dealer, sold my interest in that. We then bought and sold and built another broker dealer. For our listeners that maybe are viewers and aren't familiar, broker dealer employs stockbrokers. Since 2011, when I sold my interest in the broker dealer, I have been really educating consumers as to where I believe the economy is headed, what pitfalls and what opportunities are out there. And that's the focus of the 7 books I've done since 2011, and the focus of the radio program and the newsletters that I do. So I view it now as my job is getting the message out and educating people.
Amazing. And by the way, we'll be talking about that. But if you want to find out the book right now, you can go to revenuesourcingbook.com. That's revenuesourcingbook.com. And today we're talking about building a retirement lifestyle. So Dennis, let's dive right in. What's the number one secret to building a retirement lifestyle?
Well, I'm going to go back and quote my history professor, who gets smarter as I get older. And that is that if you don't study history, you're doomed to repeat it. Or as Mark Twain said, history maybe doesn't repeat itself, but it certainly rhymes. So taking a look at where we are economically, I think, is the most important thing to recognize and to take into account. If you plan for retirement the way your parents or grandparents did, it's my view that you'll likely fail. I believe that Federal Reserve policies and government policies have created this artificial economy since the time of the great financial crisis. And I believe that moving ahead, we are going to see some challenges and likely moving into a stagflationary environment where we have consumer price inflation, but traditional asset classes don't fare so well.
So it sounds like understanding that history can repeat itself, but at the same time, understanding that what our parents did to retire and live the lifestyle they want to is not necessarily going to work or fit for you. Am I way off?
Yeah, no, that's exactly right, Brett. And for example, who would have thought 2 years ago you could have money in long-term U.S. Treasuries last year and lose almost 20% of your assets? We're not supposed to lose money in U.S. Treasuries. So traditional asset classes, I think, moving ahead will perform poorly. I think there's a lot more downside here in stocks given current valuations. Real estate, certainly when you look at the Bay Area of California, that's always been the canary in the coal mine, to use that analogy, as far as real estate is concerned. So I think real estate prices, stock prices are headed down. I think bond prices are headed down. And I think that to plan for retirement and invest for retirement, you have to be aware of alternative approaches and look at some alternative asset classes.
Excellent. So sounds like the number 2 secret is to be aware of some stuff that's not as traditional, such as real estate and the stock market. So what would be that number 2 secret to building a retirement lifestyle with some of those alternatives, Dennis?
Well, the revenue sourcing book, which, as you said, is available at revenuesourcingbook.com, talks about the fact that Thomas Jefferson, one of the founding fathers of our country, suggested that if we allow central bankers to control the issue of our currency, first through inflation, then by deflation, the banks and corporations that will grow up around the people will deprive them of the very continent their fathers conquered. And I think we're seeing Jefferson's prophecy actually come to fruition. So to answer your question, I believe that you have to have some assets invested that will perform well in an inflationary environment. And I think you have to have some assets that will perform well as this reset happens. We're going to have to go through a deflationary environment simply because there's more debt in the world than can possibly be paid. And the 1930s taught us that means we're going to go through a deflationary period at some point.
So what is the number one secret to knowing what those alternative investments are?
Let me give you some examples. So if you look at the 1930s, I think we can learn a lot from that deflationary period. The number one performing asset in the 1930s was a highly rated corporate bond. Now, let me caution the viewers, caution the listeners, I'm not talking about a bond fund. I'm talking about, in a perfect world, a laddered portfolio of highly rated corporate bonds. Ford Motor Company didn't sell as many Model Ts in the 30s as they did the 20s, but all their bondholders collected all their interest payments. They got their principal back too. Same was true of Minnesota mining and manufacturing. So highly rated corporate bonds that are collateralized by tangible things are a really good deflationary asset. And of course, if you want an asset that protects you from inflation, I think you have to think tangible. You have to think gold, silver, many commodities I'm a big fan of presently. The commodity to stock ratio is at a 50-year low now, favoring commodities and, of course, not favoring stocks. So very cursory view of maybe where someone should think about being.
Okay, so it sounds like two of them would be highly rated corporate bond, not a bond fund, with a company like a Ford Motor Company might be in the 1930s as a tangible asset or tangible product they're producing is one way to help in an inflationary environment. And for the deflationary environment, gold and silver.
Yeah, actually, in an inflationary environment, gold and silver, deflationary corporate bonds. Deflation is typically characterized by real estate, stocks, and a devaluing of those asset prices as debt is purged from the system. So highly rated corporate bonds tend to be the best form of debt to own because the counterparty risk is collateralized.
Excellent. What is the number 3 secret to building a retirement lifestyle?
I think that you have to start by defining your target, Brett. And I think this is where a lot of people fail. So if you're approaching retirement and you've been saving money in a 401k, one of the best things you can do is put together an income map. We talk about that in the revenue sourcing book. As the late, great motivational speaker Zig Ziglar said, you can't hit a target if you haven't defined it. So the first thing you want to do is define your target. And as you define your target, you want to maximize Social Security. You want to maximize any income you might get from a pension if you're fortunate enough to have a defined benefit pension. And then you'll have to figure out how many assets from your investments will you need to use to supplement your lifestyle. And then, of course, you want to make that income as tax efficient as possible. So define the income map first. And then you figure out how much money should I put in this safe money bucket to protect me from deflation? And then how much money will I have left for contingencies or to protect me from the effects of inflation, as that's likely to continue near term.
Okay, so define your target income and then have an income map and define where you're going. Okay. And what haven't I asked you so far that I should be asking you? That's really maybe we can dive into the book a little bit here. By the way, if you want to learn more about Dennis, you can go to revenuesourcingbook.com. That's revenuesourcingbook.com. What might be some other ideas here to consider, Dennis?
Well, I think in today's environment, and it's maybe a bit ancillary to the focus of your show, but you should be looking at tax planning. We have under current law lower income tax rates from now through tax year 2025. And if you've saved money in a 401k or an IRA, the question is not, are you going to pay taxes on whatever the withdrawals are? The question is, when are you going to choose to withdraw them and what will the tax rate be? So, for example, there may be some tax planning opportunities for someone over the next 3 tax years. A married couple, for example, does not jump out of the 24% income tax bracket until they hit a little better than $364,000 in taxable income now through 2025. In 2026, based on what we know now, you'll jump into the 25% bracket at about $89,000 in income. So there might be a big opportunity to save money on your IRA and your 401k long term. And now when you reach age 73, you're going to take required minimum distributions, and those can adversely affect the level of tax you'll pay on your Social Security. So we don't want the tail to wag the dog here, Brett, but certainly we want to maximize from an income tax planning perspective that income model that income map that we put together.
Sounds like it's a tax flow strategy, not just a cash flow strategy. And then as a part of that, if you're married and you're making 325 right now, you're good up until about 25% bracket is where you're at. You're pretty good. But in a couple of years, it's going to drop to $89,000. Wow, what a big drop. As a part of that too, Dennis, I do believe the capital gains tax rate, they're saying maybe even next year's federal going to go from 20 maybe to 26 or 28, as well as the estate tax exemptions in 2026 are going to cut back basically in half, if not lower. So talk to us a little bit about capital gains tax rates and perhaps even estate tax rates.
Yeah, I mean, I think that generally speaking, tax rates are going to go up. So I think that's true of capital gains tax rates. I think that's true of the estate tax. I mean, it wasn't that many years ago that the estate tax exemption was $1 million. And that's a pretty easy class warfare card to play. There's not a lot of people out there that have a $2 or $3 million net worth. So I can see that being resurrected. Many people don't remember that prior to 2000, prior to Bush II's tax cuts rescinding it, there was an excise tax on retirement accounts. So, I mean, all those things I think have the potential to be revived. They were here once. When you take a look at a $32 trillion national debt, you take a look at a deficit that is huge, it's hard to think that tax rates are not going to go up. So I think being proactive in your tax planning when you do your retirement income planning is really, really important.
Excellent. Let's transition a little bit into capital gains tax planning as well, Des. I'm curious, what's been your biggest frustration when it comes to the 1031 exchange with your clients, friends, family, the people that you advise, and or any other capital gains tax deferral lack their options for clients that are selling highly appreciated assets?
Yeah, we deal. I mean, frankly, with 1031 exchanges, we deal with them a bit, but not a lot. I think the biggest frustration I've seen over the past couple of years is trying to find a suitable property to move into. I can think of an acquaintance that I have who has invested in storage units for years and years and years and has done 1031 exchanges. And they just sold a storage unit for a big profit, looking to do a 1031 exchange, and they were just unable to find a suitable property. So I think that goes back to how artificial this market has become because of Fed policy and government policy. I think it's been difficult to find a suitable property to move into.
Yeah, we call it the shotgun wedding, right? Where you have 45 days to get engaged and 180 days to close. And sometimes it creates this pressure situation where you're either overpaying for property, or even what we've seen the last 6 months where interest rates have gone, let's say 3.5 for commercial loans, 7 months or so now, to 6.5, maybe 5.5 if you can really negotiate pretty good. And this influx of the cap rates that were perhaps at, let's say, 4 or 5s before, and now you have a negative arbitrage and you're chasing these deals. And also, like you said before, real estate values in general seem to be trending down, especially commercial real estate. And so you put yourself in a situation where you're letting the tax tail wag the investment dog. And we have a solution for that. It's called a Deferred Sales Trust. By the way, if you're listening, we can save your failing 1031 exchange. And it works for businesses, cryptocurrency, stock, private or public. And it doesn't involve any kind of 45-day or 180 or like kind requirement. You can diversify your wealth. If you want to learn more about that, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. That being said, Mr. Dennis, I'm curious on any creative solutions that you have used when it comes to the estate tax. We touched on that a little bit here, right? If someone's worth, $54 million right now, and it's all tied up into one apartment complex or one business, and they're not necessarily charitably inclined, and they don't necessarily have bought a bunch of life insurance, and they don't have 50 kids to gift it away, man, I mean, they pass away, they get a stepped up basis, at least their heirs do. But that exemption, if they're, even if they're married at 24 million, it's still going to be subject to $30 million. That'll be subject to 40% death tax at 12 million. So I'm curious, what are some of the ways that you're working or helping people through that estate tax challenge?
Well, it's not exactly the scenario that you just outlined, but we did just work with a medical professional who had accumulated $30 million in a retirement account. They'd also invested in some shopping centers back in the 80s and 90s. So they had about $100 million net worth, and they were looking at the problem that you just very articulately outlined. Because the retirement account money was seasoned money, we were able to, and because they had a real estate business, we were able to set up a profit sharing plan for that particular client. We were able to roll the retirement account money into the profit sharing plan. And because it's seasoned money, the profit sharing plan could buy life insurance. So we actually used qualified money to buy life insurance. And the plan is to do a buyout based on the IRS has guidelines to determine the fair market value of a life insurance policy in a retirement account. So we'll use the one that's most favorable to move that out into an irrevocable trust outside their estate. So basically, they're gifting into this grantor trust, and the grantor trust will ultimately own the life insurance policy to offset that estate tax. So if someone has, the right pieces to do something like that, that can be a great way to let the IRS subsidize your insurance costs.
I think it's amazing, Dennis. We present solutions similar to that. And the biggest thing we get, Dennis, is, well, Dennis, that sounds too good to be true. Like, why don't I know about it? Why don't my advisors know about it? I'm always curious, for someone like yourself who's so has so much experience and has helped so many people. How do you? My way I say it is, look, we don't need more solutions. We need more people. The people have all the solutions. We need the people who know how to do this and have already done this thousands of times, over 20 plus years and been through audits and all of those kind of things. But I'm curious, how do you answer that question when someone says, Dennis, wow, that sounds amazing and cool. Never heard of it. Sounds too good to be true.
Well, I would simply say that, I've been a lifelong student. So I think I've had 3 original ideas in my life, and I'm proud of them all. But I think someone once told me that the definition of a pioneer is someone face down in the mud with arrows in their back. So not a great way to be. So what I like to do is associate and get to know people like you and other professionals that can help me provide good solutions to my clients. So the outline that I just gave you of the plan, a very rough outline, cursory outline of the plan that we did, worked out great for a client, but none of that was my original idea. So I think that the reason a lot of advisors don't necessarily know about these solutions is the same reason that a very small percentage of the population are lifelong learners and readers. They just don't make it their priority to do so. So I think you need to make sure that you work with someone that has that background, but more importantly, you have to have a team approach, because nobody has a monopoly on good ideas.
So well said. Yeah, I think that's so important to build that team. I think it starts with a tax flow and a capital flow or capital, growth mindset, right? Which is not only just having an abundance mindset that there's other ideas that could solve my problems, but really looking at it from every angle for cash, capital, and tax flow. And then number 2, building a dream team, right? And that dream team is going to be typically an extension of what you're trying to accomplish. Means you probably need to add another person who has that expertise. It's sort of like a general practitioner who might be your doctor, who, when you're in good health, they take your blood work and they do your tax return and they help you with some things. But if you need ACL surgery, I blew my knees out, 1 knee out, 2 knees actually, playing basketball, and I had to get reconstructive surgery. Well, that practitioner wasn't the one to do the surgery, but he was a complement to the general practitioner who helped to diagnose what was going on. So all of these things are a part of building that dream team. And then ultimately, you got to figure out what solution is going to help you achieve what lifestyle you want and what legacy you want to leave. And that does take planning and being a lifelong learner. And guess what? It's ever more complicated, the tax code and what's going on. So you've got to be ever more diligent to know that I've got to commit to this and get a team to commit. Any last thoughts on that, Dennis?
Yeah, I mean, I tell clients, hey, I'm a quarterback. Okay, you don't want me carrying the ball, you don't want me blocking, you don't want me catching the ball. You want me to orchestrate the process. I have a good general understanding of a lot of things, and I have a really good specialized knowledge in a few areas, but no one has a specialized knowledge in everything. So I think it speaks to your point that you've got to have this dream team. You've got to have someone you trust to refer you to the right people. And programs like yours to get the message out and let people know that these ideas do exist, and there are people that specialize in them. They do a great service for people.
Fantastic. If you want to learn more about Dennis, you can go to revenuesourcingbook.com, revenuesourcingbook.com. If you want to learn a little more about some of the strategies that I'm referring to with the Deferred Sales Trust and estate planning solutions as well, you go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. That being said, Dennis, are you ready for the lightning round?
I will do my best.
All right, here we go. So knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you would make sure to tell yourself to do?
I'm going to do two golden nuggets. I would work out intensely every day before I was 50, which is when I started. And I would read one more book every week. That's
great. I love that. Question number 2, what is the number one book you've gifted or recommended the most in the past year?
Oh, what a good question. I read a lot. I would probably suggest that Ayn Rand, the Atlas Shrugged book is something, given the current economy, given the current political trajectory, that if anyone hasn't read it, I would suggest they read it.
Excellent. Question number 3, what are you most curious about right now?
I'm curious about your Deferred Sales Trust.
It's like I was maybe going to weave that in somehow, some way, right?
No, when we're done recording, I am curious about your Deferred Sales Trust.
Sure, I appreciate that. Yeah, we will talk more about that. Next question. Number one leadership quote or theme, Dennis, that you strive to live by?
I think you need to inspect what you expect, and you cannot expect anything that you are not willing to do.
Excellent. Last question. After all your success, helping all the people you've helped, all of the, I don't know, I guess if 70,000 listeners on average, right? I mean, probably millions over the years, people with financial advice, thoughts, wisdom, strategy. What's the number one practice that you do personally to stay centered in your values and stay encouraged to charge for higher heights?
I am an avid reader, read at least one book a week and I haven't read a fiction book in 30 years. I work out intensely 5 and 6 times a week, and I spend some time journaling every day.
Fantastic. Well, Dennis, it's been more than a pleasure to get to know you a bit here, and I appreciate you sharing your story. I want to encourage you to keep using your gifts of helping to be a quarterback for people that are trying to building a retirement lifestyle, helping people to escape feeling trapped by, a lack of cash flow or tax flow or different strategies, and essentially it's helping people to get freedom, more freedom, right? For people who want to get in touch with you, would you remind one last time what's the best place for them to find you?
Yeah, if they go to revenuesourcingbook.com, they can request a free copy of the book. I'd be glad to send it to them. When they get the book, all the contact information will be in there, and it's a good way to just get acquainted with some of the philosophies that I embrace.
Fantastic. And I want to thank everyone for listening to an episode of the Capital Gains Tax Solutions podcast. Also stream on Expert CRE Secrets podcast, by the way, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust, or even getting with someone like Dennis to explore some other cool creative ones that he has too, can help you defer millions of dollars of capital gains tax, escape you feeling trapped by your primary home, business, public or private stock, cryptocurrency, so you can create and preserve more wealth, or help your clients, friends, and family do the same. If you want to check out the new book that's coming out, I would love for you to check it out. It's called actually Building a Capital Gains Tax Exit Plan. Okay, it's coming out. We have D. Kevin Harrington from Shark Tank in the book, and a number of other smart people. I have a couple chapters too. check that out on Amazon in about 30 days. And then if you want to check out our consultation or our free ebook, you can go to capitalgainstaxsolutions.com to get started. Thank you so much for listening, watching, subscribing, all of the above. We appreciate your support. Please share this so it could be inspirational.